All right, guys. Hey, welcome to another episode of the Practical Wealth Show. So, hey, I've got a return guest. So we haven't talked in at least a good year and a half, maybe 2 years now, right? And so I have to Mr. John Casmon. And so let me tell you about John or remind you. Well, I've got a lot of initials. So let me tell you about John. So John's a real estate entrepreneur who has partnered with busy professionals to invest in over $100 million worth of apartments. John also cultivates active multifamily investors to help them start and grow their business. He hosts Multifamily Insights podcast, formerly Target Market Insights, and he is the co-creator of the Midwest Real Estate Networking Summit. And so prior to becoming a full-time real estate investor, John worked in corporate America overseeing marketing campaigns for General Motors, Nike, and Coors Light. John Casmon, welcome back to the
Hey,
Practical Wealth Show.
Curtis, thank you for having me. It's great to be back, man. Been a little while since we spoke, but lots changed in the world. But I'm excited to be here and talk to you again
Lots.
today.
Did we talk before or after COVID?
I feel like it was before, but I'd have to go back and double check. But I
Yeah,
feel
I
like it
think
was
it was
before.
before. The world has changed. So and you know what, let's catch me up. Tell me what I didn't tell them, first of all, for the people that haven't heard we'll link to the old broadcast, but tell them what I hadn't tell them that got you into this, and then let's talk a little bit about helping these people make some money.
Sure, absolutely. So, as you mentioned, I'm a real estate entrepreneur, which just means that I invest in real estate and find ways to make money doing that, right?
Mm-hmm.
And the thing that's a little unique with us is we work with busy professionals to partner and invest in these properties. That allows them to get the benefits of owning real estate without the headaches of being a landlord themselves. So, that's what we do. And I kind of got into this because before I was in corporate America doing marketing. I did marketing for 15 years at General Motors. Nike was one of my clients, Coors Light, Mountain Dew. And in doing all that work, the marketing world can be really chaotic. And when I was at General Motors at headquarters, I was there at the time where we went through bankruptcy.
Mm.
And when you're at a company and it's as public as that situation was, the anxiety levels kicked up pretty big time, right? So for me, I was trying to find another solution. How do I insulate myself from this? And real estate is what popped up for me. Real estate was something that I could wrap my head around. It was tangible. It was a physical asset. I could go see it. It wasn't like some tech startup or some app that I had to, come up with.
Right.
It seemed pretty, blocking and tackling style for me to figure out. So that's what we did, and ultimately ended up scaling and working with other people to the point where we went full time into this business and started working with other people.
Awesome. And so that's interesting. So look, here's a clue, guys. So you can't just sit there and be a sitting duck and take it. Look, he saw read the tea leaves and started to work on his skills, looking at other ways to secure his income, as real estate. So that's. I always tell people one is the worst word in business, right? Because you could, like, just having a job. I've used just a job as a very risky, because you can get fired for one of two reasons: any reason or no reason at all. And I feel, I find that very risky. So let's talk to him about how would they get. Well, let me see. Don't want to start there. Um, what's the best way to get started in? No, I want to go. Let's go to. I'm sorry. It's early. I'm on cold medicine, y'all. So what I like the idea of the busy professional. So let's talk about
Okay.
them,
Okay.
because I think that some people don't want to go out there and go to class and go boots on the ground looking for stuff to buy. So let's talk to them today for a
Yeah.
second. How what why this is a good opportunity for them.
Well, I think to your point, first of all, you got to understand the why. Why would I even invest in real estate? And if you
Mm-hmm.
do invest in real estate, how and what's the best option for you? At the time when I was starting out, one, I didn't have a whole lot of money, right? I was still
Mm-hmm.
working. I was very young in my career. So I was still kind of stacking up money.
Mm-hmm.
And though I was busy, I didn't have any kids or I wasn't married or anything like that. So it made sense for me just to try to save everything I could.
Mm-hmm.
Um, I tried to learn everything I could learn about real estate. I read books. I went to, RIA events, so Real Estate Investor Association events. I, eventually started listening to podcasts, and that kind of became a thing. And I tried to learn as much as I could before I actually started investing, surrounding myself with other people who were investing. And then eventually I was able to, get started and buy that first property, which was a 2 unit.
Mm-hmm.
So, depending on where you're at in your career, you can follow my footsteps and just learn everything you can and slowly build your portfolio, save your money, and go. But I will tell you that as I kind of progressed in my career, and I think back to my colleagues when I was working at GM, what would have been extremely helpful for them would have been to invest passively. Well, why? Well, we were all busy. And if you've got kids, you've got family, you have other obligations, maybe you don't have the time to spend your weekends and evenings, looking up deals or learning about real estate and touring properties and putting in offers and all that stuff. Not to mention, it's really competitive right now, and the landscape is continuing to shift. So if you're very busy, a better way is instead of you taking the time to try to learn all these different things, why not find somebody who has that knowledge, has that expertise, and partner with them? It would be similar to trying to learn, accounting and finances instead of hiring a CPA or partnering with a CPA. They said, nope, I'm going to learn everything about the tax code. I'm going to learn how to do this accounting all by myself
Right.
and figure it all out, right? When there's a more logical approach. But we don't think about real estate that way a lot of times. A lot of times when people think about investing in real estate, they really only think about rentals. So buying a property, having a tenant pay the rent,
Mm-hmm.
or you think about flipping,
Mm-hmm.
doing the HGTV thing. You buy an ugly house, fix it up, and then sell it. And the reality is there are a lot of other ways to invest. One of those strategies is what we do, which is apartment syndication, where we buy larger apartment buildings. We partner with those everyday professionals. We invest in it. We get all the perks, all the benefits of direct ownership. So
Mm-hmm.
it's not like a REIT where you only get, it's really a stock that you're buying. In this case, you get all the perks, which means the tax benefits, the tax deductions. You get all the benefits of ownership, but you don't get some of the headaches of being a landlord. And the great thing is your downside is actually protected too, because you'll be a limited partner. We, as the general partnership team, we take on that additional risk because we're the ones finding and operating the deal. So it really is very attractive for anybody who is a busy professional.
Mm-hmm.
Quite frankly, any business owner, any entrepreneur. There are a lot of other reasons that make it attractive there, and especially if you are a real estate professional. If you're an agent or you have that real estate professional designation, you absolutely should consider investing in these kind of deals.
Really? No, now I've
Yep.
never. Let's elaborate on that a little bit more because I hadn't even really thought about. I never heard anybody say that before. So, why,
Yeah.
as a
So
real estate professional, like an
real,
agent or a broker?
absolutely. Yeah.
Okay.
So a real estate professional, they get some amazing tax benefits. And essentially the way it works is if you are a real estate professional, all of our losses you get to take against your ordinary income.
Hmm.
And on our deals, the tax code is written in a way that rewards entrepreneurs and real estate investors because we provide housing, we provide jobs, we help to stimulate the economy.
Right.
Now, with that said, there's something called bonus depreciation,
Mm-hmm.
and we're able to accelerate the losses on our deals. So even though we have a property that's making money, that's going up in value, the way our accounting and our IRS tax code is written, it says that these properties go down in value over time because they're getting older.
Right.
So with that said, we're able to say, hey, instead of 27 and a half years where we get to deduct, the value over that time frame, we're going to accelerate that and take the bulk of that in the first year. So now we get this nice paper loss where even though we made money from an IRS standpoint, we're showing that we lost money.
Mm-hmm.
And if you are a full time real estate professional, you can take all of that against any earned income. If you're not a full time real estate professional, then you can take it against passive income, right? You can take it against any passive income, any other real estate investings or passive income, but you can't take it against your W 2 check. For real estate professionals, they can. So if you got a nice commission check, you want to reduce that so you don't have to pay as much in taxes, you can invest in these kind of deals and offset those gains. So it's a great tool for any real estate professional in particular, but it's a
Right.
great tool for everybody, but real estate professionals in particular really get to take advantage of it.
That's some good insight. I think that John, what we teach people is to save. Like everybody thinks they have to be fully invested at all times, right? But what I teach is to capitalize, right? So that you're taking that money, you're stacking it up, and so that what you because you need capital to do this stuff, right? And so you have to capitalize. But now if you do that, I like I'm lazy, right? So that what you just said appeals to me all the way around because I just rather make money in my what I call my unique ability which is my business, where I can control, where I understand how to generate profits. And so to me, this is something you do with your profits, with your savings. You can deploy your capital, get some, you know, all the tax benefits you talked about for, for whatever business that you're in, some cash flow, right?
Hmm.
And that's it. Your
And
goal
the
is
appreciation too, the
any
upside. I mean, this is
appreciation.
going up, and typically we're going to have a business plan. We're going to force appreciation, right? We're going
Mm-hmm,
to go in, we're
mm-hmm.
going to renovate units, or we found some operational inefficiencies. We're going to come in with a business plan to make this property worth more money. So you get really that trifecta of the tax
Right,
benefits, the
right.
cash flow, and the upside appreciation.
Is there any so we talked was before the pandemic. So now we've gone through that tunnel, and then I hear people talking about, oh, I don't know, the interest rates are high, and I don't know, the cap rates are low. And when you're looking at that, what do you see, like, if you out next year and a half in the future for the industry? Is this a good time for people to be looking at it? Should they be waiting?
Yeah, I think it's going to depend on your unique situation, right? So, I do think it's a good time to buy, but to be honest with you, I always
Always
think
think it's a
it's a
good
good
time to
time to
buy.
buy.
Right.
And part of that
That's what I
is
wanted you to say.
because,
It's always a good time to buy.
yeah, it's
Right, right,
always
right,
a good
right.
time to buy. You just have to understand what you're looking for and what makes a good deal in that market, and then how do you adjust risk. So in this case, you're talking about higher interest rates, which
Mm-hmm.
is real, and that's a big threat to your returns. So that's something you need to pay attention to and how you structure your deals. But also, what kind of business plan do you put in place, and then what kind of assumptions are you making based on that? If you're buying a property and you assume that the interest rate is going to be a 4 when you exit and when you sell, well, yeah, that's going to be very risky. So we
Mm-hmm.
don't do that, right? We want to go in with a plan that allows us to make money out of the gate.
Mm-hmm.
We also want to make sure that we control when we sell. That's how you protect yourself. If you have to sell at a certain time, then there's going to be more risk there. So
Right.
let's just say you're flipping a house, right? For house flippers, I do think it's pretty risky, because every day that goes past and interest rates are going up, an owner, a new buyer, can pay less and less for that property. There's a stat that I read that said a $600,000 house last year, so in like April 2021,
Mm-hmm.
would cost them, from a mortgage standpoint, the same mortgage payment would only give them a $392,000 house today.
Mm.
So there's $208,000 of value that's lost just on the mortgage payments. And think about it. Most Americans don't look at the total price. They don't say, hey, my budget is $400,000 house. My budget is $600,000 house. They say, hey, I can afford to pay $4,000 a month.
Right.
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 And if that $4,000 a month reduces the kind of house you can buy, well, that's going to change whether or not they decide to buy at all. Because as you told me, I could have bought a $500,000 house last year, and I could only buy a $300,000 house this year. Well, who wants to, make the sacrifices that's going to take, right? Because guess what? It's not that $600,000 house is now only worth 392,000. They still want 600,000 more.
Right.
So you're
Right.
now looking down on a different type of house for that same payment. So that waiting game, people are waiting for things to happen, waiting for the market to cool off, whatever. Well, guess what? Now they're screwed completely, and they're going to continue to be renters. So I
Yeah.
don't think waiting makes sense. But as investors, we want to control our exit. I want to control when we leave. So we want to get a loan that gives us flexibility. We want to have a business plan that allows us to force appreciation or force the value creation. So that's what we're doing. We're looking at these deals and these properties. And I think for us, when we look at the difference between, when COVID first started and where we're at today, we're going to see some inflation continue to go up. We're also going to see that come down. They're right. The reason they're pushing interest rates right now is because they do want to curb inflation. And typically what happens is somewhere between a 2 to 3 year period after they begin, rising interest rates, they actually start to lower the interest rates again, because now they've done their job. They've kind of stopped the inflation, and now they need to spur the economy back. So it's kind
Mm-hmm.
of a yo-yo thing that they're always pulling, and this is something that we expect. So for us, just to stay flexible, make sure we have cash flowing properties, but also in areas that are desirable and that are going to be in demand. And again, with so many people who maybe could have bought a house last year, but it was so competitive that they didn't buy. Well, they're going to be renters. And
Right.
unfortunately, they're either going to make a big sacrifice and buy a much smaller house or a different type of house than they wanted to buy last year, or they're just going to continue to rent for the foreseeable future. So it still bodes really well for multifamily investors.
Right. Right. And so the interesting thing is that as you hear this, so let's say you could be looking at, or I got some capital, I think I'd like to syndicate, or what you should be hearing if you're an investor is, because I always view, what I tell our clients is that flipping and wholesaling is not investing. You know, it is, it's not bad. It's like trading stocks. It's trading, it's just with a different asset class, right? And so you can't control so many variables, and it's really more of a business, more of a transactional business than it is building, passive, or I like to call asset-based income, right? And so I want y'all to take away from that. And the other thing, John has said a couple of times, because we always talk about, John, liquidity, use, and control, right? So real investors want control. And the other thing I want to point out is that one of the things we share, John, is investing is not about buying something. It's about becoming something, right? So it's become, then do, then have. And so you have to become. So if you're not willing to become, see, he's become an investor, right? And so knowing how to, so a couple things I want to ask you, but I want you to see the progression as an individual, that you have to make. Or if you don't want to become in that asset class, then you get good at your thing, and then you vet him properly, do your due diligence, and partner with them. Because this is my favorite book from last year, Who Not How, right? And so John is your who, right? And his team is your who. Let me ask you, that was a mini Curtis rant. I just wanted to pull out some points there, right?
I
So
love it. I love it though, man.
and so you invest nationally. How do you find that? Because I think that's fascinating in of itself. The best areas to invest in,
Yeah, that's a
sourcing
great
deals as well.
question.
Mm-hmm.
Great question. So we focus primarily on the Midwest and the Southeast region. And I'll answer this question two ways. I'll tell you
Mm-hmm.
what we do, and then I'll tell your listeners, if they're looking to do this, how they can approach it. So for us, part of it is I need to be able to see the properties, right?
Mm-hmm.
So, if we're on the West Coast and the East Coast and down south, like now I'm all over the country. And the downsides to that is, one is to travel, obviously.
Mm-hmm.
But more importantly than the travel is it's going to be very difficult to build solid relationships with brokers in every single market and build out strong teams all across the nation
Mm-hmm.
without having a lot of scale and a lot of funds to build out this operation. So for us, instead, we try to focus more on a regional basis. So the Midwest, think a 2 hour radius of Cincinnati, right? So like
Mm-hmm.
Cincinnati, Columbus, Louisville, Indianapolis. I can get to any one of those markets within a 2 hour drive. So
Okay.
those are areas where I focus my energy. So I have relationships with brokers there, team members. I can hop in the car and look at properties and sit down with other people I need to meet with, and I can kind of build out my team regionally, right? Because most of the people in that area, even though somebody might be primarily in Columbus, well, guess what? They probably have a counterpart in Indianapolis, or maybe they work the Midwest as well, so they're
Mm-hmm.
all over the Midwest.
Mm-hmm.
So I don't have to necessarily build out a ton of different relationships. I just really need to know who those key players are in that market. Now, we also invest in the Southeast region, and there I have, strategic partners who either live in those markets or they have, resources in that market. So they're doing the same thing in those markets to find deals. So that way I get a little bit I can get more access around the country, and I can bring that to our investors. So it's not just limited to what I can do, right? Or what my team can do. So that's the way we approach those markets. The way I find the best places to invest is, first and foremost, I want to start with kind of a national look.
Mm-hmm.
Okay. We're going to look at where are the jobs going? Where's the population going? And you'll see some common themes. The jobs and the growth in this country is pretty much in the smile states outside of California.
Mm-hmm.
So think about, from Washington, down to Arizona, to Texas, Florida, the Carolinas, Georgia. Those are the areas where there's growth, jobs are going, people are going, and there's a lot of opportunity in this country. There are other markets that are growing as well, but just in generalities, that's where things are going. With
What
that
what
said,
let
yeah,
me ask you a
yeah,
question. So how do you source that? Like, I've heard that, and I've never, like, I couldn't go online. You just go online and say, look, where are the growth areas in the country? Because I think that's important, because if you know what's going on, is you'll know what to do, right? And so I don't think a lot of times we don't think macroeconomically. Like, we're
yeah,
not, you know what I mean? We just if you're local, you're like, look at your neighborhood, I only invest in West Philly, right? And but I think I try to teach people just from a planning standpoint is to think from a macroeconomic standpoint, and then do local, but just understand what's going on. You can kind of see the tea leaves. And so what I want to do is, I'm really curious as to how you think about that, and how you, when you wake up, how do you start researching that kind of stuff. I find that utterly
Yeah.
fascinating.
So, I mean, there are things that move fast and things that move slow, right?
Mm-hmm.
So, the things that move slow are going to be where people are moving holistically, right? That's
Mm-hmm.
something you can check every year. You don't need to
Mm-hmm.
look at that, every week or every month to see, like, oh, are people still leaving California to go to Texas and Arizona? Yes, is the answer. So,
Right.
I don't need to look at that data point, all the time. With that said, I'm looking at where jobs are going. I'm looking at where population is. For population, if you want to do this, the easiest thing you can do is literally put into Google search, and you could put in something like um, uh, biggest population growth United States,
Mm-hmm.
and or biggest cities with most growth, right?
Okay.
And that'll give you a short list, and you can kind of build from there. With that said, I don't think that's as important as many people think it is, right?
Okay.
Because population growth is one thing. One, a lot of our competitors and peers have that same information. So
Mm-hmm.
they're already working on that. They're already working on developments. They're already, compressing the cap rate, which means that demand in that area is already strong.
Mm-hmm.
So that number by itself doesn't really mean that much in regards to what your return is going to be. So now what I'm trying to understand is this sustainable? What jobs are going? What kind of jobs are going there? Are these tech jobs? Are these blue collar jobs? Are these industrial jobs? Are these
Yeah.
service jobs? So what's going there? Okay, now I'm going to look at that information, and then I want to get into these sub markets. And I don't care what market you're in, there's a part of that market that's desirable, whether it's in Philly, whether it's in, Toledo, whether it's in Dallas, big city, small city, there are always going to be parts that are more desirable than the others. And what I'm always looking for, and this is really important, what I'm always looking for is the path of progress.
Mm.
I'm looking to see where's the growth, where's the growth potential, where are jobs heading, where is infrastructure heading, and finding that information is a little bit more difficult. Why? Because even if you live in that area, you may not know. Maybe you're not paying as much attention to these things. But infrastructure, you want to go to the city planning website. You want to go to, the Chamber of Commerce or the Economic Development Council, and I want to see where do they see growth? What are their initiatives? Where are they hoping to see investments? And then I want to focus on those areas. There are things like a TIF or an opportunity zone. A TIF is a tax increment funding. And what that means is the government has set aside dollars to invest in specific neighborhoods. So I'm looking at that kind of information to
Yeah.
help us
Yeah.
determine,
Mm-hmm.
hey, you know what? Here's where this neighborhood is today. Where is it going? Now, with that said, there is a challenge to it because you don't want to beat everyone else there and wait, hoping that the area appreciates in value and you're the first one there. So you got to take the brunt of the hit. I
Mm-hmm.
want to go where people are already going,
Right.
right?
Right.
If there's infrastructure already being developed, if there are other developers there, someone else is building restaurants or a grocery store, I want them to do that work first, right?
Right.
Or at least
Right.
be in the process of doing that work. That way, when I come in, I know I can get the benefits because we're not trying to hold this thing for 20 years. We do want to get the benefit of that neighborhood changing.
That's yeah. See, guys, that's brilliant. See, so you want to one, I want him to bring that out because I want you to see, let's say you like what he's talking about. This is the kind of work they do to make sure that the investment's going to work. Then they can perform for their investors, and but again, it speaks to becoming right. You've got to be willing to do some work. So if you're just not, I always tell people, John, I was like, listen, if you don't want to think, don't call me. Just go ahead and call your cousin Primerica and put it in a mutual fund. Call me. And how? Let's talk about how important it is for you to branding, or developing a strong personal brand as a runner of a fund, and how could it be important to them as up and coming investors?
I think branding is critical, right? And part of it is because I spent 15 years in marketing, right? So I
Mm-hmm.
spent a
Mm-hmm.
ton of time doing branding, but not just for the big companies I work for, but also work with influencers and micro influencers and talk to them about, how they stand out and things like that. And branding it's important because it's not just about marketing. Branding is really what people think of you, right? I'm
Mm-hmm.
not talking about advertising and marketing, which is a little bit different than branding.
Mm-hmm.
And not to get too technical here, but branding is just simply what people think of you. What do they
Okay.
think of you when
Mm-hmm.
they hear your name, your company? What do they think you do? How can you help them? Do they like you? Do they not like you? That's branding, right? Nike and Reebok, we both know they make shoes and athletic apparel. Branding is whatever you feel about it. Would you buy them? Would you not buy them? Would you consider? This isn't about advertising and marketing their campaigns. This is just the feeling you get, the knowledge you have, the connection you have. That's branding, right? So your branding, whether you are trying or not, you have a brand.
Mm.
If you're an employee, you have a brand. Either people say, "Hey, John Casmon, yeah, it's a great employee, good guy, love working with him. We should promote him," right? Either
Mm-hmm.
that's the brand I've developed, or it's I don't know about that guy. We have next round of layoffs. You can move him to the front of the line. You're gonna have a brand. You're gonna be one of
Right.
those quiet
Right.
quitter guys, right?
Right.
Who
Right. Right.
they're like, yeah, you're easily expendable, or you're gonna be somebody who is paramount to the success of the company. So you're gonna build a brand whether you get a logo or colors or a website or any of that crap. That stuff doesn't make you a brand.
Right.
So that's what branding is, right? So it
I
starts with
love that.
the way
Like, because
people
I
think
never
about who
really
you
thought
are.
about that. It's like, well, I'm like from the Dan Kennedy School of Marketing. So it's like, to me, branding is a byproduct of good marketing, right? Good direct response marketing. But it is what they think of you. Like, if you look at, now, if you don't like him, but Trump, but if there's a brand there that his buildings are going to be first class, his stuff is going to be first class. I interviewed a brother, his name was KR. KR, he's from Philly, right? He's up in New York, but he puts his
Mm-hmm.
name on his buildings,
Mm-hmm.
and so you have a certain amount of things. So if you look, and you can do that at a small real estate investor, yeah, they know you've got granite counters and there's a brand there that where you have a waiting list because they want to rent from you. Because they know you get the work done, you turn it over faster, your repairman will be out within the day or the next day or that kind of stuff. Is that kind of what you mean, because individual people
Absolutely.
can develop
Absolutely.
that.
Absolutely. Absolutely. I mean, the branding is again anything, the branding is just the way people see you. Now you
Yeah.
can influence your branding, right?
Yeah.
Through your messaging and your values and how you carry yourself, the word of mouth marketing, social media. Like you can absolutely, create and cater it. Again, I go back to Nike.
Right.
Well, Nike spent a lot of time and a lot of money helping us to craft a brand and an image
Yeah.
that they wanted to live up to, right? So getting the best athletes in the world and, making sure that they had the best designs and the coolest things and the right mantras and all those things, the slogans. So that all contributes to a brand, but a brand is ultimately what someone takes away. It's not what you say, it's what they hear.
Mm-hmm. Mm-hmm. Talk to about them about attracting investors and raising capital, because that's really would you say a major part of finding
Yeah.
them. Then you got to get the money to buy them.
Yep.
Okay.
Well, yeah, I mean, in our business, that is the thing, right? We work with everyday professionals to pull those dollars together, and then go out and buy these properties. And if anyone is interested in raising money for anything, I tell everyone that there are 3 C's to attracting capital. So that first C is confidence, and this confidence cannot be manufactured. It cannot be blind hubris. It's not a fake it till you make it thing. It has to come from putting in the work, from being knowledgeable, from understanding your craft and understanding the service that you're looking to provide to other people. That confidence has to be from putting in the work. It
Mm-hmm.
doesn't necessarily mean that you have to have a track record or experience, but you have to have put in the work, the knowledge, to know your markets, to know what a good deal looks like, to have, different people in place. Like you just have to have the confidence in what you're doing and that belief. And if you have that belief and you've put in the work and you're confident because you're prepared,
Right.
then that's going to show with other investors. That second C is going to be credibility. Now, credibility can come from your track record and what you've done. It can also come from the experiences that you have, right? So maybe you haven't done in apartments before, but you've been in corporate America. Like me, when I first made that transition, I came from corporate America where I was recognized as one of the, top marketers in advertising. I was a part of the team that led Buick to become the fastest growing brand in America. So we had different wins under my belt
Right.
that people looked at to say, okay, even though he hasn't done this,
Right.
looking at the fact that he's managed, $100 million advertising budgets, he's overseen 7 agency partners. I feel like he could probably oversee a property
Right.
management.
Winners win. Right. So
Winners win.
winners
Yeah.
win. And so if you win in this, generally because it's not the thing, it's your DNA that you work. You have the, you're going to figure out how to do it. And so you can't manufacture that. That's just like,
That's it.
you can train yourself to be that, but you have to, it goes back to confidence. Like, the owner to have confidence, before you're confident, you have to be competent, right? And so you have to put the work in so you're competent. And when you're competent, you'll have confidence. And when you're confident, you'll make money.
There you
Right.
go.
So,
Yes.
and so yeah, that's the process, guys. You always want to take the shortcut. How do I get to it? No, there's John, I always try to point out the work behind whatever. Like, I was
Yes.
in middle school, I read this book about George Gervin. And when he was in, so George Gervin, I always tell people Kevin Durant, for y'all young people out here don't know who that is. But I read he shot 600 shots a day. I was like, success leaves clues. Guess what I started doing, right?
Yep.
My
Yep.
one of my best buddies and I, we play full court 1-on-1. We work out 3 or 4 hours a day during the summer, and we crank up 4 or 5, 600 shots a day.
There you go.
Well, okay, I was all city. Okay. And if I had a
Yep.
shot and I was squared up, it was going in,
Yeah. Yeah.
and but through the repetition, so I was confident. And so you have to get that good about your thing, because people are attracted to that. And I'm sorry I cut you off. I was a little mini Curtis ran there.
No, you're spot on. I mean, but that goes back to putting in the work, right? That confidence comes from putting in the work. And then
Yeah.
the other thing is credibility. So when I talked
Mm-hmm.
about the credibility, we talked about building up kind of your experiences. But
Mm-hmm.
the other part is it doesn't just have to be yours.
Mm-hmm.
So you can also lean on other people. So in this space, and just like anything else, if you want to attract capital, if I know you've never done it, well, who else is on your team?
Right.
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 So I'm going to say, hey, here's what I've done. But guess what? Here's who I've surrounded myself. Here's my mentor. Here's my property management team. Here's my contractor. Here's what they've done. Here's their experience. And they're going to be riding with me on these deals. Right. So that's going to help you build credibility. And then that last C is going to be connections. You have to talk to people in your network. And here's the fallacy. Everyone tells you, hey, you want to talk to friends and family. And that's great. But some people have friends and family with money, some people don't.
Right.
So it's not necessarily about just talking to friends and family. You want to talk to your friends and family to help identify other people that you should talk to. But the real goal is to find the people who you can actually help. And social media is a great way to do that. Platforms like this, podcasts, those are great ways to do that. But you have to find a way to build connections with the people who actually can and want to invest. And they're not going to do that if you haven't done the other things first, right? You got to be confident. If you don't know your stuff, why would anybody want to invest with you? You got to be credible. If they don't believe that investing with you is a wise decision, why in the world would they do that? And then last, they have to have the connection with you. They have to know who you are. They have to understand what you do, how you can help them. And that's going to help you be successful. So confidence, credibility, and connections are the 3 C's to attracting capital.
I love that. So because your number one asset, guys, is you, right? So what do you invest in? Mindset, skill set, what we've been talking about today, and network. Who do you know? But more importantly, who knows you? Who knows you can create value for them? Entrepreneurs solve problems. So the problem, if I'm hearing this right, you've got highly paid or pretty good professionals or people that are good savers that either don't want to learn or don't have time to go around and do all the stuff John does, but they need better returns, and they're tired of stock market risk, and and so he solves a problem for them by providing a vehicle that could give them cash flow, growth, growth,
Yeah,
yeah, growth,
absolutely.
and
Appreciation. Yes.
tax benefits. Who doesn't want that? Okay. So you're, if you're a regular investor, what is your solution? You're providing safe, clean, affordable housing, which is I just finished Win-Win Wealth by
Okay.
Tom Wheelwright. And he
Yeah.
goes, listen, here are the 8 investments the government will pay you to make, right? The number 1 is business, number 2 is real estate. And because what does the government need? They need housing, they need jobs, they need food, they need energy. So if you're a partner with them, you'll seriously minimize taxation by not by cheating, just by following the law. It's an incentive program. John, what as we close, what didn't I ask you that I should ask you that you want to bring out, and then what you tell them, how to follow you, and how to reach out to you if this sounds intriguing to them at all.
Yeah, it's a great question. What I would say is just how to learn more. So I think
Mm-hmm.
there's two things to learn more. One, I have my podcast called Multifamily Insights. You can check that out anywhere you listen to podcasts. Curtis was a guest. I'll make sure I send you the clip of that so you can
Okay.
add that to the show notes as well. And secondly is how to get started, right? So when you think about how to get started, there's a lot of information to wrap your head around. So in theory, sounds great. Okay, wait, I'm going to invest passively, put my money in this deal. I'm gonna get a return. Great, right? But there's a lot of questions that kind of come up after you take a second to start thinking about it. So we
Mm-hmm.
put together a sample deal package and we have that on our website. And we have a series of emails that we'll follow up with to help you get more information and wrap your head around how it works, what to look for, all those kind of things. So if you want to check that out, you can go to our website, casmoncapital.com/sample deal, and that will get you a sample deal package. You'll see what we look for, the kind of information we share on these deals, understand how the deal is structured, all those kind of things. And then obviously you'll get added to our email list so you can ask more questions or follow from there.
All right, that sounds good. So, if this is a fit, make sure you reach out to them. And because what you want to do is it's always a good time to invest. There's always a good time to grow. You do your due diligence, but you've got a partner here that's thinking about this stuff, working on this stuff. I won't say 24/7, but most of the time, right? Maybe 24/7 like me, because even if I'm not doing it, I'm thinking about it, right? And
Somebody on the
so
team's working on it
yeah,
24/7.
somebody's
So
working on it. So I asked what you want, see who, not how. And so there's always opportunity on the other side of the Chinese symbol for chaos. The other side of that is opportunity. So you just have to see the playing field, and see what plays are available to you, and run the play. Be prepared. So it's all about preparation. Part of that's knowledge, part of that's having the liquidity, and not being fearful. And how, as your knowledge goes up, your fear goes down, your anxiety comes down. So you have to educate yourself through this show, through his show, through reading. Same thing we talked about. You've got to get your familiar that there are ways to create wealth outside of the stock market, outside of Wall Street. And that's kind of the theme of our show. And John, listen, it was good to catch up with you again. Thanks for coming back on.
yeah, Curtis, thank you for having me back on. I hope all of your listeners get this practical wealth insights and they're able to apply it. And I think that's the biggest thing, right? It's one thing to listen to the show, it's another thing to take action and to actually apply it. So make sure you do that. Just take the next step to learn more, figure out what you need to do to go from where you're at today to where you want to be. And that's going to help you tremendously.
Yes, sir, my man. So listen, guys, go out there and make it a prosperous day. And tell your friends, listen, share, leave us a comment, and tell your friends about the Practical Wealth Show, and go out there and make it a fantastic day. Thanks, John.